I've always said it that market comes for two things. Market comes to take out liquidity and comes to fill up old imbalances. Now, in this video, I'm properly going to be addressing what liquidity is, how not to be part of this liquidity, and how not to be in this little trap. All right, I'm going to show you the right places to buy from, right places to sell from if you are trading structured liquidity and key level. And as we go further, if you haven't smashed that like button or that subscribe button, I urge you to do so for more videos like this. With that being said, let's get into it.
Alright, so welcome today to another episode or another class, right? So today we're going to be talking about liquidity, what it means, what it entails, and how we would easily identify liquidity in the market. Right, so let's get started. Basically, yeah, liquidity simply is just money in the market. That's basically what it is. It's basically just money in the market, right? Wherever, it's more like, let me use an analogy for you guys. I don't know if you guys know this game, Snake. As you know, younger, we used to play this game, Snake, where the game, it's like a phone, like we play it on the phone, right? Where the snake has a target and you being the player, you have to like, push the snake around, direct the snake around to go get the meal, right? And that meal is like a fuel, yeah. That is meant to make the snake grow bigger, and not just grow bigger but still move efficiently. It's the same thing with the market. Consider liquidity like a little fuel or like a little snack, something like that, or a bunch of snacks that market comes to claim, right? It comes, picks it up, and moves. So without liquidity in the market, there is no movement at all in the market. So the market needs liquidity. All right. So now they are of two types. First of all, I want you guys to know something. Liquidity lies below and above every candlestick high and low, respectively. Right? So you should put that in mind. Just know that liquidity is above every candlestick or below it, regardless of wherever it is. Right? So they are of two types, which we're going to address as the time progresses. We're going to address it. Right? They are of two types. There's the external range liquidity and internal range liquidity. Now, don't get confused. Some people do have other types. Like, if you check Dax's course on YouTube, you will see he will describe liquidity into three types. Like, there is the transactional, there is the structural, and there is the inducement liquidity, right? But as far as structural liquidity and key level is concerned, this strategy, they are of two types. There is the ERL and there is the IRL, internal range liquidity and the external range liquidity. The external range liquidity is our target, is where we expect market to go to. The external range liquidity is just like the B. If you've watched my market structure videos, if you should go back and check them, the market structure videos, you will see I made emphasis on the B. I laid emphasis on this B. I talked about this B because it is very important. It is liquidity. This is what market comes to claim. This is the zone that people come and place all their money. This is where a lot of people place their money, the stop orders, everything. The market comes to do what? The market comes to grab it. This is what we say, it is always being taken out. Market comes to do what? To grab it, and then moves and creates a new structure, a new swing structure, right? So the B in any case is the liquidity. The B in any case, this class is going to be a short one, right? So the B in any case is the liquidity. Whenever you are dealing with market structure, the B is the liquidity. Do not make no mistake. Internal range liquidity is the B. Let me put it that way, right? The internal range liquidity is the B. Meanwhile, the external range liquidity is the C. The A is our entry, right? Our A can be here, which we'll address later, and can also be here, right? The B is the internal range liquidity. Meanwhile, the C, which is the swing wherever we are buying to, same thing applies for sales. This is the C. The C is the external range liquidity. Alright, so I want you to also have it in mind that when price comes for the internal range liquidity, it always goes for the external range liquidity. Price moves from the internal range liquidity, grabs the liquidity, and goes to grab the external range liquidity at all times. Right, at all times. It will always depend on the type of trader you are. Whenever you want to identify your own, whenever you want to identify the internal range liquidity and the external range liquidity, you need it depends on the kind of person you are, right? So there are some certain traders, right? Let me give you a little graphic representation, right? That whenever they want to identify their external range liquidity or the internal range liquidity, they deal with the previous day's highs or previous day's low, right? The previous day high or the previous day low. I don't know how I'm gonna draw this right now, but okay, this right here, let me use this. Right, so this right here will be their external range liquidity in their terms of buys, and this will be a previous day high, whatever directional buyers high you're dealing with. It can be the monthly high, the weekly high, the daily high, or the 4-hour high. It depends on you, or low, as the case may be. So you expect markets to come, and takes this is your target. This is your target. So some people also deal with sessions whenever they are whenever they are addressing or picking their internal range liquidity or external range liquidity. Just have it in mind that when it comes to agro market structure, social liquidity key level, right? Always know that your internal range liquidity is the B. Some people call this place the structural liquidity, others call this the inducement. Whatever it may be called, just know this is what we are not looking to buy or sell from. This is what is meant to be swept. Now, this is what we are aiming to sell or buy to the external range liquidity. I don't know if that makes any sense. Alright, so here and here. Meanwhile, this is our A. This is our C. I don't know if that's clear. I hope we are all following, right? I hope we are all following. I hope we are all following. So a little bit quick note on something here. I want you to also know that while dealing with liquidity, a lot of people even like to wait for confirmations. They wait for the liquidity sweep, because whenever the liquidity sweep has happened, we already know that okay, the next direction after it has been swept is the direction of where it swept. I don't know if that makes sense. This place swept, we already know that the next place we are going to look for is buy. A lot of people, a lot of traders wait until the liquidity sweep happens. It's like a little confirmation for them to do what it is they want to do. It's a little confirmation. Why some people are just aggressive traders, they can just enter the market directly because they believe based on their directional bias they are good to go. People like me, I don't always have to wait for confirmation. I don't always wait for confirmation. When I have my setup there already, I just follow everything. If I follow with confirmation, it's probably when I'm dealing with continuation setups, which we would address in a later video, right? It's probably when I'm dealing with confirmation setups, I know that I might wait for the liquidity sweep as a proof that market is going to continue in this particular trend, or this direction is going to remain where it is. Or maybe I'm dealing with a change of character, right? I'm dealing with a change of character. So now this is basically what it is, right? Don't forget what I said. The B is the IRL, that's internal range liquidity. Meanwhile, the C is the external range liquidity. Meanwhile, the A is where you're buying or selling from, right? Do not forget I said that it depends on the kind of trader you are. Whenever you're identifying your liquidity, your previous day high and your previous day low matters as a trader. That is if you're dealing with as a day, if you're dealing as a day trader. Meanwhile, if you're dealing with it as an intraday trader, you might deal with your Asian high and your Asian low, because you know that eventually they are always going to be swept and taken out. If they're not taken out, sometimes depending on Judah swing or anything you're dealing with, right? Depending on Judah swing or however your setup may present itself, liquidity would always be taken out, right? So it just depends on the kind of trader you are and how your strategy presents itself to you. So with that being said, right, with that being said, I want to give you guys some little chart example. I already said from the get-go that this class was not going to be long because it's not that much of so much of an explanation to deal with. Just know what liquidity is and lies. Yeah, I'm going to say one more thing before we go. Whenever I deal with my own liquidity, whenever I deal with liquidity, especially the internal range liquidity, whenever I want to identify mine, I know that I'm dealing with it after the break of structure has happened. See, in this case, the break of structure, typically this is how it normally looks whenever I address mine. So liquidity is here, right? It comes after the break of structure has happened. So the next candle is either a V shape or a single candle. Yeah, let's address that real quick. There are forms you can find the liquidity. You can find it in A shape, an A shape key level, right? You can find it in a V shape key level, and you can also find it as a single candle liquidity. You can find it as a single candle liquidity. But before you pick a single candle liquidity, you have to make sure that on the lower time frame, this looks like an A shape or V shape. That is why the single candle liquidity can be taken, because like on the lower time frame, it looks like an A shape or V shape. How do you identify it? It is a pullback. It is usually like a pullback, right? It's usually like a little retracement. The market comes and sweeps off. Now let's go to chart example of this. All right, here is this gold setup we had, right? Look at this now. We have first identify something to show you. One thing about liquidity is it shows you whenever market is either changing character or is continuing a trend, right? Whenever you are having a change of character, there is a liquidity sweep that is always backing it up. There's always a liquidity sweep. Now look at this. We've been on this downtrend beautifully. Now look at what happened. Market did what? It swept, right? It swept. Then we had a break, right? So if we had a break, it just simply means our C is this. This is our C, right? This is our C right here. And then, like I said previously, your A can either be here. It is where market starts to actually buy from, right? It is where the market starts to actually buy from. So your A in this case is this QML, which we would address while dealing with entries in a later video, right? Is this QML right here, right? So people call it QML, people call it people call this level the breaker block, people call this level the QML. In this case, I chose the QML as my entry, right? But where is the B? The B is here. Look at this. This here can be your B, right? These two can also be your B. If you check it now using the line chart, you get to see something. They are V-shaped key levels, right? Even if you're not able to get it this clear on the 1 hour time frame, that it's probably just one candle, go to a time frame lower, you will get to see your V shape clearly. Look at this. Do you see the V shape clearer? This is what I'm talking about. You get to see it clearer on lower time frames. But you can't just pick any next candle to be your V shape. You can't see this and call this liquidity. Something. So let's just say this broke, right? The way it broke this candle here broke this place. You can't just pick this particular candle here as your liquidity. No. Why? Because this, my friend, is not on the lower time frame looking like a V shape. This is the candle here. This is the candle. It does not look like a V shape. Check it on 30 minutes. It does not look like a V shape. It is the same thing. A lot of people probably pick it and say, no, there is, because there's liquidity. A lot of people will tell you there's liquidity at the highs, and like I said previously, there's liquidity at the highs and lows. But while picking your internal range liquidity, it has to be like a form of V shape for you to be sure. Now in this case, although market hasn't really come back to claim, the market has been on a buy streak lately on gold, right? When you look at this, this is a V shape. This right here is a V shape. These are V-shaped key levels, right? So you can pick this. Now look at this particular doji candle here. Let's see it on the 15 minutes. Look at this. It's giving you some sort of a V-shaped key level, like a little substructure. Let's use it that way. Let's check on the lower time frame and even lower time frame. Look at this. You see what I'm saying? It gives you a better graphic representation of it, like lower time frame. Okay, so whenever you want to identify your key level, your liquidity, make sure that it's either in form of a V shape, on an A shape, or a single candle that has the V shape or A shape on the lower time frame. It's a proper representation or a proper look whenever you're identifying your internal range key level. Now the external range key level is your target, right? It's your C. Look at the swing that has happened here. This is the swing structure, like I've said in my previous market structure video. This is the swing structure, right? Okay, let me even identify it for you to get what I mean. So this is the swing structure right here, right? This is the substructure, which is the liquidity, right? This is your B. This is your B. Do not forget, this is your B, right? The market comes and claims it, right? So this B right here is the liquidity that is meant to be swept. Markets would come, take it out, or price will take it out and go straight to the C. That is our aim here. We have something quite similar to this right here. We have something quite similar to this. Look at this here. We have this little breakout that's happened here. Okay, let's use this. We have this little breakout that's happened here. Look at this right here. So this, and we also have a liquidity sweep. Liquidity sweep indicating that market is moving or changing character, right? Liquidity sweep, it has come, and the liquidity comes and sweeps it, takes out. This is the internal range liquidity in this case, right? This is the internal range liquidity in this case. Market came and swept it and gave us the external range liquidity, which is here. So if this is our external range liquidity and this right here is the break, it means, my dear friends, this could be our B, and also this could also be our B. So market has come, price has come, in other words, swept the B and has given us a buy. Same thing could happen. We'll have a break here, the same thing, sweep the B, but I don't know, market did not really come back for this, right? Price did not really come back for this. So yeah, this is a better representation of what I'm talking about, right? So the B at all times, never forget, the B at all times, yeah, is our internal range liquidity. Meanwhile, the C is our external range liquidity. Market moves from the external range liquidity down to the internal range liquidity, then to the external range liquidity again, down to the internal range liquidity. It's like going to get its fuel to keep moving. Alright, so that's all we have on liquidity. Our next class is probably going to be addressed on key levels, or if there's any other thing and comes to my DM talking about liquidity, I'll address it. See you guys next one.